Thanks, Kia. Well, are you trying to decide if now is the time to buy a house? Mortgage rates are down to the lowest they've been since just after World War II, but some analysts think the Fed's may be about to raise the rates. So how does that factor in? The Watchdog on Wall Street, Chris Markowski, is here to tell us. How you doing, buddy?
Very well.
All right, so some are saying that they think that the Feds may raise the rates. First of all, do you think that's the case? Because there's a lot of disagreement about this. And if they do, why would they do that with a weak housing market?
Well, it's not so much the Fed doesn't have like a magic button say, okay, here we're going to start raising rates and we're going to put it here. The Federal Reserve can go about raising the lending rates. But what's happening is that they're going to be purchasing less mortgage-backed securities. So basically, when you're doing that, there's not going to be as much of a market for these securities. And the banks that go ahead and make these loans, they like to buy them and then they like to sell them off, or they like to have them partially guaranteed by Fannie and Freddie, the FHA. That is going to stop. Or it's going to slow down to a great degree, which is going to make it a little bit more difficult to go out there and get a mortgage. If you still got great credit, you're going to be able to go ahead and do that. Okay. But if not, you're not going to be getting so much of these, so lucky with some of these guaranteed type loans.
So, and if you have good credit, of course, that can affect the rate that you get. You know, that can affect.
It's like anything else. It affects your rate when you buy a house. It affects your credit card rate, can affect many different things. Your credit score does matter. Now, people are worried right now because how fragile the housing market is, and because we all know how weak and everybody's lost money on their homes. Is this going to affect it to a greater degree? And I'd say yes. I think housing values are going to become much, much lower. It's an inverse relationship. If the price of a loan goes up, which the interest rate is, obviously the price of the home has to come down because it's all about affordability for individuals.
Sure. So in your opinion then, I mean, would it be a good, overall a good thing for the country to see the rates rise and have more stability on that end, or to stay low so that more homes are sold?
I'm still going back to my bulldozers and wrecking ball scenario. We have too much inventory out there, and supply and demand is a rule in any type of a market economy. When you have too many houses out there, too many buildings out there, not enough people to live in them, well, you still have to work all the way through that, and we're just not there yet.
Okay, let's get specific then. Yeah. So say you're somebody, and you advise us all the time, don't let things like tax credits or interest rates, spur you solely to buy a home. Don't get into a situation just because of that. You have to have the money. But let's say you are kind of on the fence. You're about where you want to be in terms of the down payment. You're about where you want to be in terms of affordability, but maybe you're waiting for something better. Is now a good time to buy in anticipation that maybe rates will go up?
It depends. Right now, because we see what's going on in the housing market and also the job market, people may have to move. Whatever it may be, you have to move to where the jobs are. It's a tight economy. If you're set in your job and your career and you know you're going to be there for at least 10 years and you've got that 25% to put down to go in, I say okay, that's not a problem. But if those factors are not there, don't. Rent for the time being. Deal with it until you're settled and you know where you want to be, you know you're going to be there for an extended period of time, and you've got the money to do it.
That's a great point, because you might have to move and then you're stuck trying to sell it in maybe a worse market.
Absolutely.
Even though you got a good deal on the rate.
So you're saying if you think that you'll be in your job for 10 years?
Yeah.
10 years?
Yeah. Well, you want to stay in your house and in and around your house for at least 10 years. At least so you know you're going to be getting your money back. If you're going to be staying there for a couple-year period of time, just rent.
What about 3 months? Maybe a job about 3 months.
That's how you ever give yourself.
I have a feeling I'll be staying at Sanford
hotel.
Apartments for a little while.
Freedom Deck guy, okay?
Oh,
just so you know,
gosh,
I'm not the Freedom Deck guy. It's just Markowski.
Your tan looks better. How's that? All right, so let's get into this. You know you're my buddy. All right, let's get into this. These companies now, in light of the Tiger Woods situation, and by the way, Tiger Woods is supposedly getting out of sexual rehab this week. In light of what's been going on, and we saw companies dropping him like flies, many companies are now looking to get celebrity insurance, protective insurance. What's that all about?
This is nothing new. All companies do this. Celebrities do it. You ever heard the celebrities that insure their legs if they've got nice legs?
Yes, I've heard that.
So you can insure anything, basically. Okay. So a company's saying, okay, if we're going to spend X amount of $1 million putting our brand with this person's name and they do something terrible, we want to be protected with our investment. They go ahead and do that.
But, I mean, how can they make a claim? What do they say when they make the claim?
Well, write it out in the insurance policy. Okay. We are going to pay you X amount in premium dollars. If this person does this, 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 and this, well, then you owe us this. So you can write a policy on anything. So it's actually pretty smart business at this point in time when they're investing such great dollars. Yeah. They also do this stuff with athletes, too, when they get hurt.
True.
You've got a major your contract, that athletic team will actually take out insurance whether or not the person's playing.
Okay, all right. Well, that's interesting, I guess. Just, you know, not
for
very
insurance,
common.
it's interesting.
It's interesting for insurance, yeah, but I just didn't hear about all of that. So you think Tiger got paid a little bit after these companies dumped him? Kind of like a severance package?
I don't think Tiger got paid. It's the companies that are taking out the insurance
I know
to protect
that.
themselves. I think Tiger's probably got some caveats in his contract as well, saying if you do something wrong, we can revoke it or whatever it may be at certain clauses.
Okay, another red flag this morning to talk about is this whole Brittany Murphy saga. Her husband, you know, had scheduled to hold some benefit tonight for her. The latest on that is he's decided to put it on hold. I think because people were raising red flags over this whole, he's charging $1,000 for people to come to the event. Does that kind of pique your interest, or you wonder what in the world's going on?
Well, supposedly, I took a look, and it's supposed to go to a charity that $1,000. But knowing this guy's track record, what he's all about, I wouldn't be surprised if most of the money goes into his pocket. I definitely is going to give people cause. I mean, this is a guy like a week and a half ago, he tried to blame his wife's death on the fact that she didn't get a movie role.
Yeah, on Warner Brothers, exactly.
So you got to be kind of careful in regards. You know, we talked about this a couple weeks ago, and there was a problem with the was the Wycliffe Jean deal with Haiti.
Yes, with Yale, his accounting firm or board of directors was under fire.
And there were some errors made there. So, you know, be careful. This is a brand new charity by a shady guy. You decide whether or not you want to spend $1,000 and go.
But what are some of the things you should look out for, though? If you love Brittany Murphy or a star like that and you want to help, what are the warning flags?
Well, you're still going to be able to contribute to that charity, but just make sure it's on the up and up first. And your local state will definitely cover what the charities do. They have all that information is actually public. You can see how much money actually goes to the charity and how much money goes to administrative costs.
Okay. Chris Markowski, Watchdog on Wall Street.